Gold just did something it hasn't done since 1979, and if history repeats itself, which the data suggests it almost always does, what comes next for the global economy is literally unthinkable. Welcome to What Changes. I'm May. Today, we are stripping away the noise of social media, where half the voices are screaming that gold is going to the moon, and the other half are yelling about a bubble. Instead of listening to the endless stream of gurus, we are going to look at the actual data and the charts, because as the saying goes, the news tells you what happened yesterday, but the charts tell you what is about to happen tomorrow. Before we dive into why Cuba might be the next major flashpoint after Iran, there is always a fog of war in the markets, especially now, with social media drowning in information that is often fake or misleading. To cut through this, the most effective filter is to stop watching the news and start watching the money flows. Before the Iran strikes even hit mainstream outlets like CNN or Fox, the smart money, the big institutional players, was already positioning itself by flowing into gold ETFs. If you wait for the headlines to tell you what to do, you are already too late to the move. Right now, gold is exhibiting what experts call a heartbeat pattern, a specific formation that often precedes a massive breakout. We saw this institutional volume explode in late August 2025, well before any major conflict was officially on the radar. This wasn't a coincidence. It was the result of big banks and institutions buying quietly and consistently. When Goldman Sachs or JP Morgan is building a position, they don't post about it on X or TikTok. They wait until they've already bought. And only then do they go on TV to sell their book by talking up what they already own to the public. This is why retail investors often end up buying the top while the pros are already looking for the exit. To truly understand why gold is behaving this way, you have to understand the history of oil. Every major war in modern history has been decided by who controlled the fuel. This isn't a conspiracy theory, it is documented history. Look at World War II, the legendary Desert Fox. Rommel was unstoppable in North Africa until he simply ran out of fuel at El Alamein. By 1945, German aviation fuel production had collapsed from 180,000 tons per month to just 11,000 tons. They were still building planes, but they had nothing to fly them with. Japan faced the same fate. They attacked Pearl Harbor because the US had cut off their oil, and the moment their supply lines from Indonesia were severed, the empire was over. No oil, no empire. It is that simple. History shows that oil supply shocks are the ultimate catalyst for gold surges. In 1973, when OPEC weaponized oil and cut supplies by 5% per month, gold prices skyrocketed from $97 to $183 in just 12 months, an 89% increase. Then came the 1979 Iranian Revolution, which caused a global panic. Gold went from $226 to $850 in a single year, up 276%, like a modern-day meme stock. The chart patterns we are seeing today are almost identical to those of the 1979 period. Whether it was the Gulf War in 1991 or the invasion of Ukraine in 2022, every time there is a supply shock in oil, gold surges anywhere from 15% to 90% within the following 3 to 12 months. Currently, we are facing significant disruption risks in the Strait of Hormuz, where 20% of the world's oil flows, while Iran and the US trade threats about blockades. The real signal comes from the insurance markets. Lloyd's of London, which insures the world's oil tankers, has reportedly cancelled war coverage, which is a massive red flag. It only takes a few drones setting a couple of tankers on fire for oil prices to hit the roof, much like what happened when Saudi facilities were attacked. But while everyone is focused on Iran, the smart money is looking at the next domino, Cuba. Cuba is sitting on a strategic Caribbean shipping lane just 90 miles from Florida. For years, they've relied on cheap Venezuelan crude in exchange for doctors and support. However, as the US squeezed Venezuela, Cuba fell into a dire fuel crisis with collapsing infrastructure and constant blackouts. Historically, whoever controls the oil controls the outcome, and Cuba's geography makes it a prime piece on the global oil chessboard. If you follow the money rather than the news, you'll see that shipping disruptions are spiking and insurance costs for Caribbean tankers are rising. Iran isn't the end of this cycle, it's the beginning, and Cuba is likely the next flashpoint. When navigating these conflicts, your social media feed becomes a war zone of its own, filled with people trying to scare you into selling or pump you into buying what they already own. To survive, you must ignore predictions, including the ones you hear from the most famous gurus, and follow the institutional flows. For instance, when money flows into defense ETFs like the ITA or energy majors like Exxon and Chevron, it tells you exactly where the big money expects the world to go. These institutions have rules. They don't guess which button to press every morning based on their feelings. We are currently moving through what can be described as a four-phase recovery pattern. Phase 1 is shock, which is where we are now. This phase is characterized by panic selling, screaming headlines, and spiking prices in gold and oil. Phase 2 is absorption, where the market begins to calm down. Ironically, this is often when retail investors finally give in and sell their positions after absorbing a 10% or 20% drop, which is usually the worst possible time to exit. You don't make money by diamond handing forever. You make money by having clear rules on when to sell and protect your capital. Beyond gold, silver is showing even more signs of stress. There is a growing divergence between paper gold and physical metal, particularly on the COMEX, where banks bet on prices without owning the underlying asset. The COMEX Silver Stress Index is currently very high because physical silver supplies are running out at an alarming rate. Silver is essential for modern warfare. It's in every missile, jet, drone, and submarine. In the 1979 crisis, silver actually outperformed gold 3-1. Along with silver, energy majors and defense stocks are classic safe havens. Governments seldom cut military budgets during a war. After 9/11's defense stocks outperformed the S&P 500 by 47% over the following 3 years. Even boring utilities become attractive because they are domestic, US-based, and pay steady dividends when the rest of the world feels unsafe. The unthinkable event isn't just that gold might go to new highs. The charts are already suggesting that the truly unthinkable part is how many people will continue to watch the news, panic, and make the worst possible financial decisions at the exact wrong moment. Success in these times isn't about seeing the future. It's about having a framework and the discipline to turn off the noise. Most people have never been taught how money actually flows, because financial education is rarely prioritized in the mainstream. If you want to stay ahead of these changes and understand the deeper patterns of the global economy, I invite you to join our Telegram channel and follow us on X. You can find the links for those, along with my latest book recommendation, in the video description below. Taking action and educating yourself is the only way to protect and grow your wealth when the fog of war settles in. History shows that after every major crisis, whether it was 1979, 2001, or 2022, the market eventually hit new all-time highs. Those who won were the ones who stayed patient, followed the charts, and remained rules-based. Don't let your retirement account be a casualty of headlines designed to get clicks rather than help you make informed decisions. Stay sharp, keep learning, and I will see you in the next video. I'm May, and this is what changes.